This is Greg Mikulowski with the Forex Market Update in the New York morning, specifically for FX Street. Well, needless to say, the euro is in a we're just entering a free fall period here. The market moved below this key trend line support at around the 28.85-ish type area. That level also corresponded with this low going back to the week of March 19, 2009. That low came in at 128.85. This trend line, which actually takes a low from 2008, the low from 2009 came in at that around that 128.85 level as well. You can see here at 128.884. The break of that sent the euro back down in a free fall. Of course, the impetus for this is the rioting in the street within the in Greece. Three are reported dead, buildings on fire, and just total mayhem, and that's causing investors to flee the euro, sell off. And it's causing quite a stir here in the markets as funding costs also go higher in the euro region. Now, where can we go here? And what you have to do is, or what I do is look at the previous lows, look at the areas where the market did find support in the past, and that's what we have to go on here. In the low here from this week right here, March 15th, for instance, came in at 128.34. Market has moved below that level. We just squeezed up to around the 40 level and back down below that level. So we're going to be watching market trading at 128.20. We'll be watching that 34 level to see if that holds the top side as sellers continue to enter the market. Another key level that I have pointed out here from old remembered prices include these lows right here. You can see a low here. This low came in at 127.17. This low for this week came in at 127.05. This low for this week came in at 127.21, and then we broke below that level, closed above it. Use that the level as another area here, and then we had a high here at 127.53. So really the 127.04 to 21 area is probably going to be another area of support on the downside should the market continue its ways in that direction. Taking a look at the 5-minute chart, you can see the seriousness of this move to the downside. And if you go back in time here, this trend has been continuing all week long. We had a high of the week of 133.61 in the first hour of trading, or 61 in the first hour of trading. Since that time, the market has sold off five big figures now to new lows. The break of the 85 level here, you can see how the market came down, tested that, and then fell like a stone through that level. So that's a story in the euro versus US dollar. How about the other currency pairs? Well, if you take a look at the sterling on a daily chart, we are at a key support level, which is a 61.8% retracement at 150.74. That's of this move from the lows here in March to the highs that we saw in April. 61.8 comes in at 150.74. The market dipped below that level, but we are seeing more buyers in the sterling, and that's being reflected in things like the euro sterling as well. Taking a look at the euro sterling on a 5-minute chart, obviously selling off rather sharply here after testing the 100-bar moving average. So the pound sterling is finding a somewhat of a safe haven bit, at least against the euro. Taking a look at the Swiss franc, this is at another key level here, 61.8% retracement of the move of the 2009 high to low range. So this is a high for 2009. This is a low. The 61.8% retracement comes in at 111.84, and that's about right where the market topped out. The actual high came in at 111.87. So we are finding sellers against that level again as another safe haven, the Swiss franc to be a safe haven as well. So we may see some sellers in that with the stop above the 111.84 in that currency pair. Other currency pairs include the Japanese yen. Taking a look at a 5-minute chart, the yen also becomes a safe haven currency at times, and we are seeing some a little selling pressure, although the market is more consolidated here. We do have a double top at the 94.97 level, which gives the traders a key technical level to watch, and the dollar Canada continues to go higher as slower growth from around the globe should start to take hold. If things if there's uncertainty, if there's a risk of slowing of economies, then the commodity prices should start to move lower, and we may see that reflected in things like the dollar Canada, Aussie versus U.S. dollar. Take a look at the from the daily chart. However, went right up to the 100-day moving average. That 100-day moving average comes in at 103.35. We'll be watching that level. Market's been below the 100-day moving average going all the way back to this point right here. This is a blue line of chart. We get above that level, we could see some longer-term buyers in the dollar versus Canada. Finally, we'll take a look at the Aussie versus the U.S. dollar, and we did break through the 100-day moving average in this currency pair at the 90.78 level, and the next support level comes in at the 50% retracement of the move up from this low to this high. Again, all this is off the back of the expectations that if we have that the market may be more, or the economies of the globe may slow going forward as a result of all the things that are happening in the Eurozone. Slowing of that economy could slow things like China growth, could show slow demand for commodities, and that may see that reflected in the Aussie versus U.S. dollar. You can see here on the 5-minute chart in that chart how we are rebounding a little bit from that level. So it's all in front of us as we speak. There are certain stories being played out, but the main story certainly remains the euro versus U.S. dollar. Be aware and be prepared, but it does seem the market continues to be under pressure for that currency pair, and longer term ideas as far as where this currency pair might go continue to weigh on that on the euro. So this is Greg Mikulowski with a market update for FX Street.